Hello everyone, I am Pratap here. We are at lesson 29.3.3. This is about performance evaluation of weekly income trade bearish trade setup analysis we did during last week. So 1 week is completed after we recorded 29.3.2 video. So now we are going to evaluate. And moreover, during last weekend, we identified 6 bearish trade setup supported stocks. Out of 6, we identified MGL, this particular stock MGL, as high probability trade setup that supports weekly income trade bearish trade setup. And entry time frame is 75 minutes zone. How we identified this as a high probability trade setup, and what is the performance during this week? The chart you are seeing is the last weekend chart before 1 week. Is price really entered into this 75 minutes entry zone? Is it given profit or is it stopped out? All these things we discuss. And also we will look into the other stocks, what happened during the last 1 week. That progress also we will evaluate. Even before that, if this is your first visit, please understand this lesson is having dependency on the earlier lessons. So you need to complete the earlier lessons. And all the earlier lessons are available at our NeoStock YouTube channel because we are providing free training. So go to our NeoStock YouTube channel. At our channel homepage, this is our NeoStock YouTube channel. At our channel homepage, click on the tab Playlists. You are seeing playlists here. Click on the tab. Here one of the playlists you can see Supply Demand Zone Price Action Course. And this playlist is having all the training lessons. You click on View Full Playlist. I'm clicking on that View Full. Now we are into Supply Demand Zone Price Action Course playlist. Now you have around 84 training videos are available in this playlist. You need to start your training from the first lesson that is available at the bottom of the page. So scroll down to the bottom of the page. Here, starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one, but according to my training instructions mentioned at our Telegram channel. I provided all the training instructions at our Telegram channel. In case if you don't know our Telegram channel, I provided the link to our Telegram channel in this video description. Go to the video description. The link is available and join at our Telegram channel. So at our Telegram channel, pinned messages. At the top of the window, you can find pinned messages at the Telegram channel. Click on the pinned messages. There you can find all the training instructions. So learn the course according to those training instructions. Here your goal is not to complete the course. Your goal is to become an independent trader. If you want to become a very good independent trader, learn the course according to the training instructions. And that will help you become a very good independent trader in the coming months. So please make use of this opportunity. Now let's get back to our lesson. So here last week we identified MGL as high probability trade setup, bearish trade setup for weekly income trade. Why we identified this as a high probability? There are multiple reasons. One reason, this 75-minute zone is a fine-tuned zone inside the weekly supply zone. What is the fine-tuned zone? Inside a weekly supply zone, you have a daily supply zone. Inside a daily supply zone, you have a 75-minute supply zone. Inside means it is not exactly in the middle. It can overlap at the proximal line, it can overlap at the distal line, or it can be in the middle somewhere. Any possibility. But here the 75-minute zone, the very interesting thing is it is overlapped at the distal line of the daily zone. Of course, it is in the middle of the weekly zone only, but overlapped at the distal line of the daily zone. Okay, if we overlap at the distal line, what is the advantage we get? Lesson 22 concept. Do you remember? The lower time frame zone as an horizon to the higher time frame zone. It is a new concept I developed that you learned in lesson 22. And that concept is a very powerful concept. Many times that concept gives a very good successful trades. Exactly that is what happened here. Our entry zone, 75 minutes supply zone, is a fine-tuned zone. Not only it is a fine-tuned zone in the weekly, but it is also horizon to the daily supply zone. This daily zone picked up the orders from this zone and the zone formation has been completed. In such kind of situation, the lower time frame zone might be having a very strong institutional order flow. That is one reason why we thought this is a high probability zone. Second reason, this daily supply zone is also having daily EMA confluence. And also weekly supply zone is also having weekly EMA confluence. By considering all these factors, our 75-minute supply zone might be having high probability to get success. Not only this point, there is one more point. This 75-minute supply zone is a high liquidity supply zone. High liquidity supply zone might be having higher success rate, provide one condition. What is that condition? Thus, our entry zone, 75 minutes high liquidity supply zone, should have a fine-tuned 5-minute zone. Why we should have a fine-tuned 5-minute zone? That is what you learned in lesson 16. Lesson 16 you learned when a zone can be violated. We identified several reasons. 80% scenarios, nowadays we are in a position to tell the zone might be violated well in advance. Those concepts you learned in lesson 16, especially the second video in lesson 16. So that's why you need to look into fine-tuned 5-minute zone. If that is there, we can confidently say this zone is having strong institutional order flow. There are higher chances we get success. Not only that, as long the zone is a fresh fine-tuned 5-minute zone, this particular high liquidity zone supports multiple testing. If the fine-tuned zone is a fresh zone, at least one order flow should be there, a fresh zone, because a zone might be having multiple fine-tuned 5-minute zones. In that case, at least one fine-tuned 5-minute zone should be a fresh zone. In such kind of situation, until that fresh zone is tested, this zone supports multi-testing because it is a high liquidity zone. Did you notice? Did you notice this zone is already tested, this 75-minute zone? One, see here, the zone is created with a drop candle. After that, price is moved, tested first time, again came down, tested second time, this time came down. Already tested 2 times. Does it support the third time? If this zone is having a fresh fine-tuned 5-minute zone, definitely it supports. So that's why that kind of checking you have to do before you plan your trade. Okay. Now let's get into this stock and let us see what really happened before we plan a trade. What kind of work you have to do, that we will discuss. See, continuation to the previous. Previously, the chart is like this. The candle was closed here. This was the closed candle. And Monday onwards, see, price action took place. And again in Thursday, prices entered into the zone. It gave a trade and then it came down. Where you are planning your trade inside? Maybe type 1 proximal or type 2 proximal or type 3 proximal or in the fine-tuned zones depending on your risk management. I can plan a trade like this. because imbalance started from here, I may consider this is the area type 2 proximal I consider by excluding this medium size candle, because imbalance started from here and continuing from here. So that way I consider these three are the real base candles, and this is the area we can keep our order. This is one way. See, actually see here, exactly prices reached and came down. Now next time prices went a little and finally came down. Whether you took the trade in this candle, or you took the trade in this candle, or you took the trade in this candle, it doesn't matter. Finally it reached the target or not, that is important. Okay, before that we identified this zone as a high probability trade setup zone. Okay. First of all, before planning the trade, what you have to do? You should check this zone is having fine-tuned 5-minute zone or not. If fine-tuned 5-minute zone is not there, there are higher chances the zone might be violated. Okay, before that, look into daily. This daily zone is having daily EMA confluence. Look into the weekly. This weekly zone is having weekly EMA confluence. See, prices almost came near to the weekly EMA, and from there how sharply prices came down. So that means our weekly zone, weekly EMA confluence, near weekly EMA confluence, we have the 75 minutes supply zone is available. That's why prices went almost close to the weekly EMA confluence. That is the reason why we identified this is a very powerful, high probability trade setup to get the success. We are not saying it is 100% we get success. We are saying based on our strategies, we identified this could be a zone might be having high probability to get the success. That is what happened. Is it really happened? Let us check, because to take a trade, so many conditions are there. Last week in the video I did not discuss, because if I discuss all the factors, it is like I am giving you the recommendation. We are not supposed to give you the recommendations. So that's the reason why I didn't really get into the actual trades. Now we will discuss, because all these things are already completed. Now no more trades. Now what we are going to discuss is only the evaluation part. But the work you are supposed to do before you are actually taking the trade, that is what I am going to discuss now in this particular stock. Okay. Now let's go to 75. First, to accept this 75-minute zone, is it having fine-tuned 5-minute zone? Is there available or not? We need to confirm. So go to the 15 minutes time frame. Is there any 15-minute zone is available here? Yes. We have a 15-minute zone is available. Here we have this medium size candle as a leg in. You have 1, 2, 3, 4 base candles and a drop candle. So let me draw the zone. Okay, this is 15 minutes fine-tuned supply zone. Inside this 15 minutes fine-tuned supply zone, we should be having a 5 minutes fine-tuned 5-minute zone. Let's go to the 15 minutes area. Check is there is any fine-tuned area is available. Okay. So this is a rally candle. Remaining all are medium size candle, base candles. You can consider 1, 2, 3, 4. Maybe this is a medium size candle only at the hidden body. But medium size candle you can keep inside the zone. So that way you can draw a zone like this. This is one way you can draw. There is another way also you can draw. Lower time frame zone as an horizon to the higher time frame zone. Where is it? Instead of drawing, you can also draw like this. This 5-minute zone is a lower time frame zone horizon, drop base, drop. This is the area. It picked up all the orders, and then this entire zone formation, including 75-minute zone formation, is started from here. Either way you can draw. It doesn't make much difference. Only thing is, if you draw from here, some more additional order flow you can include. Sometimes price reach here and again it will come down. In case if you are planning your trade here, you may miss the trade if they are going back. So that's why either way you can. But where you keep your stop loss, suppose if I am planning my trade here, where do I keep my stop loss? Above this 75-minute zone, because this is not a 15 minutes or 5 minutes trade. This is a 75 minutes trade. So you will be keeping your 10% ATR value. Approximately I am drawing, maybe your stop loss could be maybe somewhere here. Maybe a little below or a little above. Okay, approximately let me draw. Your calculations perfection is not important now in our analysis discussion, but when you are planning your actual trades, perfectly you will be measuring, because you know the stop value, ATR, stop buffers, everything we are providing in our everyday premium video reports. So this is how you can plan. But where I want to take my, okay, now we have a fine-tuned 5-minute zone, we are happy with that. But where to plan our trade? What should be my entry? You have multiple options here. Let's go to the 75 minutes time frame first. First option is you can plan your trade at type 1 proximal of the 75 minutes with this stop buffer. This entire risk is within your manageable limit, 2% area. You can plan your trade. If it is more than 2%, by doing position sizing, you can plan your trade. But position sizing, the biggest problem is intraday trades. Okay, you can do position sizing in the cash segment. But F&O position sizing, if you are taking only 1 or 2 lots in F&O, it is not possible. You are a high value customer, high value investor. Probably you buy maybe some 10 futures you will buy. Buy means here you go for short. Instead of taking 10 futures, probably you may take 6 futures or 5 futures. That way you can do position sizing. But if you are taking 1 or 2 futures, position sizing is not possible. At the time, what is the option you have? You have to minimize the risk as much as possible until you get 2% risk. But the problem when you are minimizing to the 2%, what is the problem? Sometimes you will be missing the entry. Price may not be reaching up to your fine-tuned entry level. You go deep and you take. Where you go and deep and take, maybe type 2 proximal you take, or type 3 proximal level you take, or maybe this fine-tuned 5 minutes level you can take. Many times what happens, prices may not be reaching up to here. That way you will be missing the trade sometimes. That risk will be there. But anyway, when you can't do position sizing, at least depending on the luck is also required. What is depending on the luck? Where you fine-tuned exactly that level prices should come, you should get the trade, and then prices will be going down. That should happen. Then only your trade will be executed, right? So that way, that kind of luck sometimes is required. But cash segment, if we are doing in intraday related, okay, but this is not intraday trade. This is a swing trade. WIT trade setup is a swing trade setup. Sometimes you need to hold your positions for a week period or more than a week period. If you are lucky, within 1 or 2 days you get profits. But it won't happen every time, right? So that's why, how you are planning your trade, where you are keeping your entry, they are all very, very important. Okay, when the risk is high, obviously, we will be planning. Let us assume risk is high. We are planning our trade in the fine-tuned 5 minutes level. So fine-tuned 5 minutes level, you plan your entry, but your stop buffer is at this 75 minute zone level. Most probably this will be within the 2% risk will be there. I'm not getting into the details. See, actually you got the trade. When you got the trade at Thursday, prices entered in that area. But before prices enter into that, what should be your target here, you see? You have a rally, base, 2 base candles and a rally. That way let us draw a zone here. What is this zone? 75 minutes demand zone. This is a 75 minutes demand zone. This demand zone is 75 minutes demand zone. Because you are taking entry at the 75 minute zone, obviously you will be planning your target up to the 75 minutes demand zone. This is a supply zone trade on target. Okay. So now before prices reached into this zone, but now you know already it happened. You know prices already reached. But before prices reached, how you should plan your trade? Okay, fine tuned 5 minute zone is there. That means there are higher chances this zone will get success because institutional order flow is there. Okay, this fine tuned 5 minute zone doesn't mean you have to plan your trade in that area. You can take trade before itself. You can take trade in the type 1 proximal itself. Or you can take trade at type 2 proximal. So type 2 proximal, by excluding this medium size leg, you will be getting here. Let me draw a blue color line here. This could be your type 2 proximal entry. That way you can take. Still, if the risk is not manageable, you can take at 15 minutes entry level. Where is the 15 minutes entry zone? Here. This is the area. Let me draw a blue color line so that you understand easily. See, this is 15 minutes entry level. Still, if this is also high, you can take at 5 minutes entry level. If this is also risk is a bigger, what you do, you will go inside and you will fine tune your entry. See, I'm changing how I am changing the blue color line. Suppose here, from here to here, within 2% risk, you are able to manage. Now, if price comes to that blue color, then only you plan your trade. See, prices reach to the blue color, you are lucky you got the trade. But many times it won't happen. Let us assume price reached here. Now from here it started falling down. Do you get the trade? You will be missing the trade, right? So such kind of risks will be there. So that's why carefully you have to do this analysis before you finalize the trade. Finding entry is very, very important. Finding the entry with the 2% risk management is even more important. If risk is beyond 2%, position sizing is also very important if you are trading in the cash segment. But trading in the cash segment for short trades is not practical. Intraday it is okay. But you can't hold cash segment, short trades you can't hold beyond intraday. So swing trades you can't use, short trades. Only F&O only you have to take. So that's why F&O, your margin cost should be within the 2% risk management level. That way you have to plan. If you are taking 1 or 2 futures. But if you are taking more futures, you can cut down few futures. That way you can manage the risk by doing position sizing. But small investors, many times short trades, you may not be getting enough position sizing in F&O, especially in futures. Okay, anyway, let us assume you are taking a trade at this fine-tuned 5 minutes level. Let us assume. Maybe some of you would have taken. First thing is, you should get a minimum 1:3 RR. So let's go to the short position tool. Here we have a short position. Let us, with the help of this tool, let us check whether we are getting. See, this is our target. This is the target. And your stop loss is a blue color line. Approximately that is the area, let us say. Okay. But entry is, see, till where you are getting 1:3 RR, let me check. I am moving up. See here. If this is the area, if you take, let me draw a blue color line. See, the blue color area, if you take the entry, definitely you get 1:3 RR. But this blue color line to the upper blue color, that is our stop buffer, say, is it within 2% risk management? If not, you can't take more risk, right? Your risk should not be beyond 2%. At the time, what you have to do? You have to further go inside. Let us assume it is only assumption. Till this fine-tuned 5 minutes level, we are achieving within 2% risk level. Let us assume. So this is for education purpose. I am not doing accurate calculations. But when you are doing trade plan, you should do that. See, until here, let us assume we got 2% risk point of view, 2% within risk. Okay. Now what is by moving up to this fine-tuned 5 minutes, what is the RR we are achieving? 1:5.7. So RR we don't have any issues. Here the only issue is risk is within 2%, how we are managing. Suppose if the risk is less than 2%, so you can take entry even before itself. You can further adjust taking entry. Why taking entry before? Because we have a fear that we will be missing the trade. We have a fear that prices may not be reaching up to here. Okay, luckily it reached here. But before taking the trade, you may not be knowing that prices will be reaching up to here. You can't predict the future, right? So you never know what is going to happen. Price see here, reached here, and from here it will turn back. Let us sometimes assume. Slightly, see, you have seen sometimes in some of the videos our members commented, just 5 paisa difference or 10 paisa difference, I missed the trade. Why they missed? If they would have added some time, 5 paisa, 10 paisa buffer, extra buffer for their entry buffer, if they might have added, they would have got the trade. Why they didn't add? Maybe their risk management is not permitting to add further. But if it permits, don't reduce the risk, increase the risk. You are not increasing beyond 2%. The reason for increasing the risk is we don't want to miss the trade. That is the important point everybody should learn. Frequently, if you are missing the trades, the reason is you have to learn how to increase the risk and take the trade. You might be, see, most of us, we think how our mindset in the initial stage, let us reduce the risk as much as possible so that we get maximum profit. This is how we think. Our goal is to reduce the risk so that reward will be increased and risk will be reduced. But we forget the point. If we reduce the risk too much, we will be missing the trades. Price may not be reaching up to our fine-tuned area. I mean, fine-tuned entry level, your prices may not be reaching. That's why this is a very important lesson. See, a kind of trade-off is required. At least, what is the minimum risk you can accept? That level you have to keep your entry. Just because you are getting RR, just because your stop loss will be reduced, if you are reducing the risk too much, you will be missing the trades. Rarely you get trades. Or many times just before stop out you get the trade and you took the trade, after that your trade will be stopped out. So don't get into that kind of situation. Okay. See, after that what happened? Prices entered up to this fine-tuned area, almost close to the distal line. It is not violated. Even if it is violated, you will be within the stop buffer, right? Okay, but now prices came down. Now you may ask a question, next time can we take a trade? If it is having a fresh fine-tuned zone, you can take. Is it having a fresh fine-tuned zone? Yes. How? Again rally to base candles, a drop is created. Of course, this is entire thing is a 75 minutes again, LOTL zone. Now 5 minutes level, any new zones are available here? Yes, here you see, drop base, a drop is created. So new order flows institutions added. Maybe this zone may support one more test also, who knows? Possibility is there. But as of today, before taking the trade, this 5 minute zone is a fresh zone and gave you good profit. And finally prices reached up to here. Your 75 minutes target it reached. Within how many days? When you got the trade on Thursday. And when it reached the target on Friday, the next day. So that means within 2 days, the trade is completed. Why? Because the market, this is a bearish trade setup. Especially bearish trade setup stocks give quick profits. In general, while market is falling down, quickly it will fall. While moving up, slowly it will move. This is the general tendency of the market in majority of the scenarios. Of course, there are times when market is moving down, going down, slowly it will go down, and while moving up very fast it will go, but they are the rare situations. Okay, how much profit you would have gained? That is most important, right? Because this is a WIT trade. See, WIT profit should be more than DIT profits. DIT profits should be more than hourly income trade, that is intraday profits. Why? Because we are using intraday, we are using between 5 minutes to 5 minutes. Of course, HLQ zones, 5 minutes entry to 15 minutes target. That's why HLQ zones we are getting more profits. But in general, intraday, 5 minutes entry, 5 minutes target. And short-term income trade, that is DIT trades, 15 minutes entry, 15 minutes target. But WIT, 75 minutes entry, 75 minutes target. Definitely there will be considerable distance will be there, and moreover you are taking trades with minimum 1:3, but in this scenario we got 1:5 RR we got. Definitely we should get a decent profit. At least we should get a feel this is the profit this trade has, this stock has provided an opportunity. And moreover, with the help of NeoStock software, we identified this zone as high probability to get the success related zone. MGL is the first stock we identified. This is the only one stock we identified having more. There are other stocks. They are also having more probability to get success. But this is more highest probability to get the success compared to the other stocks we analyzed. Why? Because it satisfied the condition LTF, ITF, HTF zone confluence, and also it is having HTF EMA confluence. HTF means weekly. Almost near weekly zone only prices reached, and from there it came down. I mean weekly EMA confluence, it reached and from there it came down. At weekly EMA confluence, we have this 75-minute zone near to that. Inside we have fine-tuned this 5-minute zone, that is the real order flow. Okay, let us calculate how much profit we would have got. Your entry is 1336. Let me open the calculator. Minus your target. Your profit is 1286.65. You got 49 rupees profit. 49.35, close to say 50. Close to. Okay, what could be suppose if you take one lot, what could be the profit? We will calculate. So let us look into zero the margin calculator. So MGL is our stock. So let us say we have taken MGL 27th March 2025 futures. So what is the net quantity? 400. And what is the margin cost? 1,27,968. Remember, this is today's margin cost. But at the time of taking, the value might be higher or lower. Let us approximate value, let us predict. Closest value I can predict by seeing the price. Where is the current closing? At our target. We have taken price here. That means when prices were here, those values are more than the current price. More than. What is the current value? Current value 1,27,968. Definitely the value could have been here when price reached here around 1,27,000 rupees. Maybe close to 1,000 rupees would have been down, 968. It could have been 1,28,900. 1,28,900. Because price should be more. See, when prices are moving, your margin value will be increasing. When market is going down, your margin value will be reducing. So it could be somewhere around 1,28,900, let us say. So first of all, how much profit we got? So the net lot size is 400. So 49.35 into 400. You would have got 19,740 rupees in 2 days. And what is the ROI we would have captured? So into 100 divided by 1,28,000. 1900. Maybe I'm adding higher value. Definitely it is less than this only, not more than this. See, we got 15% ROI we got. As per one futures margin cost in just 2 trading sessions. Excellent, right? And we identified this as a high probability trade setup supported stock. Okay. The next high probability, next to this, because we arranged it in an order. See, low probability to get success, it doesn't mean they won't work. Sometimes they work even much better than high probability trade setup to get the success, supported stocks. Sometimes low probability will work much better, sometimes. But majority of the situations, these high probability trade setup supported stocks will be having higher success rate, majority of the times. So that's why we are always giving first priority to high probability trade setup supported stocks. Next one is the KEI. This is the one we identified. But KEI we did not get. First of all, is it valid? First, before taking the trade, how you have to do? You have to analyze. Is it having a fine-tuned 5-minute zone? See, this is a 75-minute zone overlapped with daily supply zone. Both together again overlapped with weekly supply zone. Go to weekly time frame. Now this weekly supply zone is also having weekly EMA confluence. So this is also high probability trade setup supported stock. Now go to the daily time frame. Daily EMA confluence is not there. And the 75 minutes, this is the 75 minutes rally base. This is our entry zone. Within this area, you should look for a 15-minute zone. Is there any 15-minute zone available here? Now you see somewhat doubtful here. See, because of this big candle, the size has been reduced. But the moment you hide, maybe this is a rally base drop. That way you can consider 15-minute zone. Okay. So that means this should be our, let me change the color. This is a 15-minute supply zone. Let me adjust properly. Okay. Now within this area, we should get a fine-tuned 5-minute zone. Do we have a fine-tuned 5-minute zone? Let us identify. Is it having a fine-tuned 5-minute zone? Yes. So failed ERC candle as a rally. You have 3 base candles and a drop candle. Now you can draw the zone, 5-minute zone. So that means this zone is having an institutional order flow to get the success. You can also draw 5-minute zone like this. This is also valid. Lower time frame zone as an origin. If it is a failed ERC as a leg-in, base, drop. Or if you want to consider all these base candles, this is the only thing is a leg-in. If you feel like that, you have 1, 2, 3, 4, 5, 6 candles are there. This is also valid. Here, like this also you can draw. Nothing wrong. This is the origin. From this origin, this entire zone is created. And probably this is much perfect. Got it? But what happened? Have we got the trade this week? No. Because this week, let us look into the 75. This week prices did not enter into this zone. Now, the immediate question you should get in your mind, is this zone still valid? Is this zone still valid? Yes, this is valid as long as a new daily supply zone is created. This zone is valid until a new daily zone is created. If a new daily supply zone is created, this is invalid. Why? Because if a new daily supply zone is created, and if that newly created daily supply zone violates, immediately trend will be changed to sideways. Suppose a new 75-minute zone is created, but there is no new daily supply zone. New 75-minute zone is created. Is this zone valid? Yes, still valid. Suppose if the 75-minute zone is violated, trend won't be changed, LTF trend will be changed. We don't bother about LTF trend. Trend always we look into ITF. Many people ignore this point. You learn this concept, but we forget this point quickly. That's why I'm clearly telling you, trend always you should focus on ITF time frame. In this example, ITF is daily. So daily zone should not be violated, or a daily zone should not be created. Once a daily zone is created, this is invalid, and in the new daily supply zone, new 75 minutes order flows, they are valid. That means you should change your trade setup to the newly created daily supply zone. And this one will expire. But is there any new daily supply zone is created? Let's go to the daily time frame. Check, is there any new daily supply zone is created? No. Maybe Monday, next trading session, we have a rally to base candle. Let us assume a drop candle is created. At the time, what will happen? A new daily supply will be created. Within this new daily supply, the 75-minute zones will support the new bearish trade setup. But this one will expire. That means invalid. You can't use them in future. Prices reach here, you can't use if a new daily supply zone is created here. As on today, this is valid. As on today, it is valid. And this validity may change if a new daily supply zone create on Monday, the next trading session. You got the clarity, right? This is a very, very important point. Of course, I explained this concept with clear examples in the earlier video in DIT bullish and bearish trade setups, because we got good examples, because the duration was very short in DIT, not DIT, yes, DIT only, yeah. So I explained very clearly in the DIT examples. But at the time of my recording this video, new supply zones are not yet created. We don't know what will happen on Monday. Monday again, base rally might be created. That possibility is also there, right? We can't predict what is going to happen in the next trading session. We can only analyze and we will make it ready. Our analysis is valid, we will plan our trades. If our analysis is no more valid, you cannot plan your trade. How do we know if the analysis is no more valid? That point only I am explaining. Just now I explained. If a new rally-based drop is created in the next trading session, this analysis is gone. Whatever the analysis we did here, it is no more useful. It is completely expired. Now you have to do new analysis in the rally base, the newly created drop daily supply zone. You have to fine-tune. 75-minute zones are there. You can plan your bearish trade setups in the newly created zones. Hope it is clear to all of you. That is the reason why I repeated these points again and again. It's an important point. Okay, now you got clarity when our analysis is not valid. Hope I'm thinking you got the clarity. Okay, next one is BHEL. BHEL, we have a 75-minute zone suggested by our software. This is the one. Drop, base, drop. This is what our software is suggested. But within this daily zone, let's go to the daily time frame. Within this daily zone, we have one more 75-minute zone here. Suppose if first one is violated, second one will enable that short trades. If second one is also violated, that means your daily zone is violated. See here, daily zone is violated now. Price is closed outside the zone. Even if it pierced also, it is invalid, but completely this zone is gone. That means BHEL trend is changed to sideways. Now this BHEL is no more valid for the bearish trade setup. It is valid bearish trade setup. Again, any demand zones, daily demand zones below are violated. And again trend is changed to side downtrend. At the time, once again, bearish trade setup will enable. But at present, bearish trade setup is no more available in BHEL because the moment this daily zone is violated, trend is changed to sideways. Actually, this is having two order flows, two 75 minutes order flows. Both are violated. Violated, we can't do anything. But this is the time trend is changed in this stock. If you got the stop loss, we have to accept those stop losses. No other choice. Why they are violated? Maybe demand is very strong during this week. Maybe this is the time trend change is taking place in this stock. When trend change is taking place in this stock, we entered for the trades. That's why it is a bad luck for us. And we get caught in these trades. This is how you should understand. When trend changes will take place, we can't predict. As long as the trend continues, we will be planning our trades according to the trend. The time when trend changes are taking place, our trades will be stopped out. This is the one disadvantage with bullish and bearish trade setups. Bullish and bearish trade setups, our trades will be stopped out during the trend changes in that particular stock. Now trend change took place. That's why the daily zone is violated. But before that, inside the daily zone, we have two 75-minute zones. And when last week our software identified the first one, because software always identifies the nearest opportunity. What we did in our last training video, we further analyzed this daily zone and we identified there is one more 75-minute zone is there. If this 75-minute zone is violated, trend won't be changed because 75 minutes is not the trend. 75 minutes is only the entry. But where is the trend? Trend is one time frame higher than the 75 minutes time frame. What is one time frame higher to the 75 minutes? That is a daily. If daily zone is violated, then only trend will be changed. Until then, whatever the number of 75-minute zones are there, you can plan your trades in all those 75-minute zones. Provide those zones should have fine-tuned 5-minute zones for confirming institutional order flow is available. Unfortunately, both these 75-minute zones are having fine-tuned 5-minute zones. Even then they are violated. But actually, first one we got the trade. See here, we got the trade in this candle. This is the fine-tuned 5-minute zone. You may not be waiting until fine-tuned 5-minute zone. In case if you planned your trade inside the fine-tuned 5-minute zone, you might have missed this trade here. This is one, see previous trade, lucky because prices entered into the fine-tuned 5-minute zone. But here you look into go to the 5 minutes time frame, you will understand. Even if you planned in the fine-tuned 5-minute zone, small entry buffer if you had, this trade would have been executed. Here. This is happened on 3rd March, Monday. Monday. When we analyzed 28, maybe I recorded the video on 1st March or 2nd March, one of these days. Next day itself, it gave a trade. This stock gave a trade. Because price entered into the 75, inside 75 we have drawn a 15-minute zone. Inside 15 minutes, see drop, base, drop. It is a confirming this zone is having. We got the trade. See, next day prices on 4th March, prices came down, opened with gap down. But unfortunately, it did not reach the 75 minutes target zone. Go to the 75 minutes time frame. We don't have any proper zone here. But here also there is no proper 75-minute zone. But if you go back, here there is a 75-minute zone. So this is the nearest zone. Drop base with the pro gap and hidden body, rally candle, follow through candle. Here there is one more zone is also there, drop base. But is it valid? This is not valid. Why? Because this zone is already violated here. So that's why actually this area it reached. See, price reached into this 75-minute zone. But the one below a little short. A little short is. But is it given 1:3 RR at least to say it is a successful trade? No. It is not given even 1:3 RR. It is short. Let us calculate short position here. This is a 75-minute zone, right? 75 minutes distal line. I am adding some approximate value, stop buffer. Let us say our entry is somewhere here. Okay, you got the entry until this 1:2.99. That means 1:3 RR is there. Up to this 75 minutes target zone, RR is there. But till the bottom of this candle, let us assume up to where it reached the low, we got only 1:2.27 RR. That way also we say this is not a successful trade. It gave some profit, but not good enough to get the RR, not good enough to reach the target zone. It didn't reach, failed to reach. So that is the reason why first trade is failed. Actually, at some point it gave good profit. Because it did not reach our target or because it is not achieved a minimum 1:3 RR, you might be holding your trade. After that again prices came and finally stopped out. So those who took the trade in this, they are unlucky people. Some point they got good profit, but they missed all their profit. You may ask, maybe any trailing stop loss if they used, they might have got some profit. Maybe if at all you might have used a 5 minutes trailing stop, you can use. This is only the supply zone you have here. Rally based drop. Probably here you would have exited. If you exited here, probably you might have collected the taxes. Whatever the money you paid for the taxes or maybe your brokerage charges, that money you might have captured. Because the base candle somewhere here you might have exited. Let me draw a blue color line. Generally keep some buffer also, just like that exactly at the distal line you won't exit, a small buffer you will add. Sometimes within the buffer it will come down. This is trailing stop loss if you are using. Because in between we don't have any trailing stops. So worst case scenario, best case scenario, maybe if you realize exit somewhere here, some profit you would have got. Worst case scenario, you would have collected the taxes. Because here you took the trade, whatever the money probably is gone for the taxes. Those who did not book, hoping that again it will touch, again it will come back, probably your trade would have been stopped out. Okay, because the same zone is also having one more zone, if you plan one more trade, Once again, this would have been stopped out. But here the problem I have seen while analyzing, see this zone, what kind of risk it is having, even 5-minute zone. See, this is a rally candle. You have 1, 2, 3 base candles, a drop candle. This is the 15-minute zone. Within the 15-minute zone, look into 5 minutes. Anyway, it is not an intraday. We are accepting this. Intraday, we won't accept such kind of trades because see the risk is 5 minutes very big, especially because of this leg out candle. This is a morning 9:15 candle. We generally get a doubt about sometimes is it because of freak trade it is showing like this, the candle? We don't know anything. But anyway, if anybody has taken a trade in this, this is also stopped out. So the BHL is the only one completely disappointed us from this list. This is the only one disappointed completely. We have to accept that. But what about the remaining stocks? Especially one of those stocks, you will be learning some interesting lesson. Before that, let us look into the remaining stocks one by one. Next one is Concur. Concur is having a very interesting thing here. Multiple order flows are there. This is a 75-minute zone. How our software identified, this is a drop, 2 base candles and drop. This 75 minutes. And this 75-minute zone is overlapped with daily zone. Rally 1, 2, 3, 4, 5 base candles and a drop candle. And this daily zone is having daily EMA confluence. See the daily EMA. Exactly from that daily EMA confluence it reached, see sharply how prices came down. That is the power of daily EMA. But before that, look into this 75 minutes, how many order flows are there, where you want to plan your trade. That is very, very important. The 75 minutes we have drop, 2 base candles and drop. Inside 75 we have 15-minute zones are there. 2 15-minute zones are there. This is the first 15-minute zone. See here you have a drop, 3 base candles and a drop candle. And also you have a rally, you have a base and you have a drop and follow through candles. And also one more is also there at the distal line. Rally base drop. What is this rally base drop? This is the lower time frame zone horizon to the higher time frame zone. For this 75-minute zone, this is the origin 15-minute zone. Lesson 22 concept. Lower time frame zone as an origin. So definitely this is the area we can expect strong institutional order flows. But anyway, we are not planning them for intraday trades. We are planning them for to check whether the zone can be violated or it can work. If order flows are there, there are higher chances zone might be having higher success rate. Okay, now 15 minutes fine tuning is not enough to check whether these order flows are strong or not. You need to look into 5 minutes also. Go to the 5 minutes. 5 minutes. Again, all these zones are having order flows. See here, we have a drop, base, drop. Here, you have a drop, 4 base candles and a drop, the 5-minute zone. And also here you have, maybe I consider this as a leg in, failed ERC, leg in, base, drop. Maybe if you are convinced this is also a base candles, you get the risk, the whole zone you get the risk. That means 5-minute zone is almost same as 15-minute zone. So that's why just risk management point of view, I'm convinced, okay, this candle is okay. Little bigger than the other base candle. That way I considered. This is the 5-minute zone. Or other way also you can draw this zone. See here, drop, base, drop. This medium size candle is part of the base. You got a very big zone. This is a 5-minute zone. Because risk is too much. So that's why I have drawn this. But actually this is a drop, 2 base candles. This is a medium size candle, part of the base, and drop candle. And this zone is also acting as a high liquidity zone. See here, rally base drop again created. Here also you see Maybe this is a failed ERC. Let us assume 2 base candles and drop. That way you can treat. Or this is the base candle, 3 base leg candle, 3 base drop. Either way you can. So new LOTL zones are getting created. Here also you see drop, base, drop. New LOTL zone is created. So that means this zone might be acting as a high liquidity 5-minute supply zone. But risky, big risk because of this medium size candle. But anyway, this is okay. Fine-tuned zone. Because from there only it picked up the orders and came down. So anyway, this zone is having 3 order flows. But the question is where you want to plan your trade. See, wherever you plan, whether you plan in this first fine-tuned 5-minute zone, or you want to take exactly in the proximal line of the 75-minute zone, or you want to plan your trade in the second order flow, or you want to plan in the third order flow, wherever you plan, your stop loss will be above the 75-minute zone. So that way your risk management is very, very high. So where to plan our trade? Maybe here you can plan, or maybe somewhere in the middle also you can take, go to 75 minutes time frame, and you can take type 2 proximal or type 3 proximal depending on the risk you can plan. See, if I am planning a type 1 proximal, my zone with 75-minute zone will be like this. Sorry. Where is my 75-minute zone? Here. Yeah. See, my 75-minute zone will be like this. Still, if I feel my risk is very high, my 75-minute zone is like this, type 3 proximal. It's all depending on the risk management. If I plan like this, what is the advantage? Here I have a lower time frame zone horizon. Before that I plan my trade. Suppose if you plan your type 3 proximal, have you got the trade? Here we got the trade. This is the type 3 proximal entry. You got the trade. And prices are going down after that. That means still you will be in the trade. You didn't close your trade. Your trade will be continuing because here you have a target zone is here. This is your target demand zone, 75 minutes demand zone. This is the 75. Failed ERC candle as a rally, 4 base candles and a rally candle. That means those who took the trade in Conquer, you are in the trade now. Your trade will be closed once it reaches to this. Probably Monday or Tuesday, we don't know. Or maybe if the demand is very all of a sudden increases, maybe this zone might be violated and stopped out. That possibility is there. Or prices will go to this LTF zone and one more push it will give. And then again prices will go down and reach this target. Anything will happen. But you are in the trade. Because it is a WIT trade, you can't expect to close in just 1 or 2 days. MGL is a different situation. That is a very high probability trade setup supported stock. Maybe quickly it gave you the profit. But every WIT trade is not like that. A WIT, mostly more than a week, you need to hold the trades. Sometimes up to 2 weeks also you need to hold your trades. So that's why don't think like a short-term trader or intraday trader to get profits immediately. WIT means you need to wait for several days. Maybe a week or 2 weeks, you need to hold your position. And the price won't fall just like that, like going down, down, down. It won't happen. There will be up and downs will be there. Swings will be there. That's why we are saying swing traders. Multiple swings and finally reach here. So that is the reason why I am saying currently you might be in hold. Risk management point of view, if you might have taken a trade in the type 2, your trade would have been executed. Or second order flow you have taken. Second order flow here when your trade would have been executed on a Thursday. And this trade, if you are planning in type 3 proximal, Friday your trade would have been executed. But most ideal situation is the second order flow. This is the area. If you would have taken a trade. Suppose I have taken a trade in the first order flow. That means do I need to exit the trade? You may ask the question. No. If you take your trade in the first order flow, still your stop loss is above 75-minute zone. This is your 75-minute zone. Let us assume you have taken your trade in the first 5 minutes order flow. This is 5 minutes order flow is violated, but still 2 more order flows are there. Second one is also violated again on Friday. Still you have 1 more order flow is there. When this is also violated and if your stop buffer hits, then you will exit. If this is violated, your stop buffer does not hit, still you will be holding. Who knows? From the stop buffer, prices will be coming down. In the stop buffer, institutions might have kept a trap, bull trap or something, we don't know. That might be, you can see in 1 minute time frame or 3 minutes time frame. Sometimes institutions play like that. This is one of the reasons why we are using stop buffers. Sometimes stop buffers areas, institutions keep traps. So that may push the market down. That way stop buffer might have saved our trade. But what will happen during this process? Many days your trade will be struck in this area. But that is what we are expecting in swing trades. Swing trades means you won't get profit just like that. So many swings will take place in the price movement. And finally it will reach our target. And this is our target. Okay, that means conquer is not at stopped out, not at reached the target. Conquer, those who took the trade in the conquer, you are in the trade. But where you took the trade, that is depending on your risk management. According to me, type 3 proximal trade would have saved your risk. That means maybe you might have managed the risk. If not type 3 proximal, a little above also, you might have managed the risk. Even if you are planning exactly at this lower time frame horizon, you might have missed your trade because prices did not reach up to this lower time frame horizon. So that is the reason why I am saying you should not exactly specify maximum risk management level, you should plan your trades. Okay, this is about Conquer. And next you have a very interesting learning, Tata Steel. Look into Tata Steel. A very good learning here. Everybody concentrate. Tata Steel is a 75-minute zone. This is overlapped with daily zone. And daily zone is having daily EMA confluence is also there. That way our software identified this is also high probability trade setup to get success. Only thing is it is not having weekly zone confluence. It is only ITF confluence and ITF EMA confluence. I mean ITF zone confluence and ITF EMA confluence. Tata Steel satisfied. That way it is a good stock. So moreover this ITF zone is also having ITF EMA confluence. See, daily zone having daily EMA confluence. But before that, this 75-minute zone we should fine tune with 15 minutes, because if the order flow is not there, there are higher chances zone will be violated. At the time we can't plan the trade. So that's why we planned, we are fine tuning 15 minutes. See here you have a rally, 2 base candles and a drop candle. In case you are not convinced, this is a drop candle, this is a medium size candle, this size is also almost same. Now you can accept this as a base candle and this is a drop candle and follow through candle, because this candle is bigger than this candle. Half body and another half wick is also there. Maybe 60% body and 40% wick and a large candle. So you can consider this as a, that way also you can draw a 15-minute zone like this. Instead of drawing 15-minute zone, you can draw your 15-minute zone like this. Either way is okay. Okay, I am convinced with this rally based drop. And now in the 5 minutes time frame, go to 5 minutes. 5 minutes time frame, you have an horizon, 5 minutes horizon. See this. You have a rally, 2 base candles and a drop candle. This 5 minutes horizon to the fine-tuned 15-minute zone. This is the 15-minute zone. For this 15-minute zone, this 5-minute zone is the origin. Not only that, See, failed ERC rally candle, you have a base candle, drop candle, LOTL 5 minute zone is created here. LOTL. Maybe this is origin is also having strong order flow as a high liquidity zone. But anyway, the origin itself is a very strong one. So this is the area you can plan your trades. So that's why we can plan our trades in this area, this zone. Where you are planning exactly origin or before, that is up to you. So according to your trade plan, it is okay. And now go to the 75 minutes. Now what happened once market started on Monday? This is this is Friday. This is Monday. Did you notice Monday what happened? Drop, base drop is created. A new 75 minute zone is created now. A new 75 minute zone is created. Now my question is this valid or invalid? Please concentrate. Very important question. Now a new 75 minute zone is created. See, now this is violated here, right? Now probably prices will be reaching. Now this is the only 175 available. Because a new 75 is created, is this 75 valid or invalid? If it is invalid, you can't plan our trade here. If it is valid, you can plan next time prices reach here. What is your answer? Is it valid or invalid? The answer is it is still valid. This zone is still valid. When it is invalid, a new daily zone is created, it is valid, not 75 minute zone. If a new 75 minute zone is created, now you can also plan your trade inside this zone if there is any trade opportunity. Now you got two opportunities. The newly created one, you can go for a short trade. If once that is violated, once again you can plan your trades in this area also. Because it is a bearish trade setup. If this is stopped out, next time again you plan your trade here. If it gives profit, you will enjoy the profit. See, when a new entry time frame zones are created, they are all giving opportunities, trade opportunities to you. You need not wait until prices reach here. Sometimes these zones will be violated, sometimes these zones will be giving you good trade opportunities. Because bearish trade setup continues here. If a daily zone is created, then this is invalid. Because why? If the daily zone is violated, let us assume this is a daily zone. If this daily zone is violated, what will happen? Trend will be changed to sideways. But is it a daily zone? No. It is a 75 minute zone. 75 minutes is LTF, lower time frame zone. Daily is ITF, intermediate time frame. Trend will be used in intermediate time frame. Lower time frame we will use entry, but not the trend. If a new daily zone creates here, this area is not valid anymore. The reason is the newly created daily zone violates. Trend will be changed to sideways. When prices reaches here, trend will be sideways. It does not support bearish trade setup. If suppose new daily zone is not created, trend is not changed. Trend is still downtrend. And prices reaches here, your trend is still downtrend. So it supports bearish trade setup. Now go to the daily time frame and check, is there any daily supply zone is created? After this zone creation, any new daily supply zone is created? Check. No, there is no daily supply zone. This is the daily zone. After that, there is no daily zone. Look into the candles. Are you seeing any new daily supply zone here? No. We have a drop. We have a failed ERC candle. And we have some again a medium size candle, another medium size leg candle, two base candles. Now suppose Monday a drop candle is created, then this will become invalid. Suppose Monday rally candle is created, this is valid for bearish trade setup. You got the point? So that's why this is still valid. Hope you got it clarity. But what is the other point you should learn? In the 75 minutes, a new drop base drop is created. Due to this, a 75 minute supply zone is created. This also supports bearish trade setup. If this is having a fine-tuned 5-minute zone, maybe you can plan a trade. Not in the 5 minutes fine-tuned area. Anywhere you can within the 75. As long as your risk is within 2% level, you can plan. Fine-tuned 5-minute zone is a confirmation that the zone may not be violated easily. Even fine-tuned 5-minute zones are there, zones will violate, but not easily. If fine-tuned 5-minute zones are there, we have better chances of getting a good trade. Okay, now let's analyze. When this zone is created? 3rd March, Monday. So Monday after this zone is created, what you should have done? You should have analyzed this zone. How? Go to 15 minutes time frame. In the 15 minutes time frame, is there any 15 minute zone is available? That way you have to see. So this is, can I consider this as a failed ERC and 2 base candles? Maybe we can. If you are not convinced, this is the rally candle. You have 1, 2, 3, 4, 5 base candles. Either way, it is okay. Okay, I am convinced. Let me consider this as a base. And this is the area. I am drawing my 125 minutes, 75 minutes supply. That means this is a 15 minute supply zone. I am giving 125 minute supply zone color, but it is a 15 minute supply zone. If not, you should have drawn a zone like this. By hiding this, you can say this is a rally, 1, 2, 3, 4, 5 base candles. Either way is okay. Okay, now within this area, you should get a 5 minutes fine-tuned zone. If you don't get fine-tuned 5 minute zone, there are higher chances zone will be violated and you can't plan trade. Go to the 5 minutes time frame. Check in this area. Is it having a fine-tuned 5 minute zone? Yes, here you have a drop base. A drop is there. But if you would have drawn the 15 minute zone like this, suppose if you say, I am convinced this is the legging and this is my base candle, 2 base candles. If I draw the zone like this, go to 5 minutes time frame. This zone to consider or not as a fine-tuned zone? A lot of doubts. Maybe slightly it is overlapped. You may consider. But more importantly, here you have, observe here, you have a rally candle, base candle, another base candle, another base candle, drop candle. You draw this zone, supply zone. This is the rally base drop is the lower time frame zone horizon to the entire 75 minutes zone. Of course, this 75 minute zone is also having a 15 minute zone. So that means you have order flows, multiple order flows. This is the one and this is the one. And this is a big order flow. Rally base drop. All these are all medium sized candles. And drop candle, large candle. And this is the origin. That way you can plan your trade you have. And this is the area you have a strong order flow. This is the area also might be having order flow. So you can buy here somewhere in this and this could be your stop loss. If you feel risk is high, you just ignore this and plan your trade in this area if prices, or maybe a little below if the risk is within your management level. And finally, what happened? Prices entered into this horizon. See here, prices entered into the horizon and then again pushed the market. Up to where it pushed? Up to its 15 minutes zone it pushed. This is the 15 minutes demand zone. But your target is 15 minutes or your target is in 75 minutes? Our target is 75 minutes demand zone. Go to the 75 minutes demand zone. Where is the 75 minutes target? Here you have a drop base rally. This is your 75 minutes target. Is it reached the 75 minutes target? Yes. Your 75 minutes target, it reached here in this candle. Just slightly, maybe it touched or maybe slightly before started moving. Okay, fine. It is reached the target. This is the daily target. Sorry, 75 minutes target. This is. And this one is a 15 minutes target. It reached the 15 minutes target. And once again, this 15 minute zone pushed, and once again the horizon what it did, once again it pushed, and this time it reached the 75 minutes target. That means if you take a trade, you will be holding your trade until prices reached here. And when you got the trade on Monday. And when it reached the target on Tuesday. First of all, is it having a minimum 1:3 RR if you take in this horizon? That is important, more important. Let us see. Short position. This is our target. Okay. And our entry is in this lower time frame horizon. Probably a little above, some buffer will be there. Within the buffer, and how much ROI it has given? 1:3.43 RR it has given. RR, not ROI. 1:3.4 RR it has given. Let us assume you have taken even second trade. This is successful. Second trade also you have taken. It is slightly pierced. It is within the stop buffer. So your trade will be, let me draw a blue color line, you will understand. Your trade is still, maybe that means your second trade you might be still is there. This is going to violate or this is going to reach. Some patience is required for us. Because this zone is already pierced, definitely you have some fears whether it will be further going down or not. But you have to be, once you take the trade, you have to be in the trade either until it reaches the target or until the zone is violated. Or if you have any fears, maybe you would have exited here. That way you might have collected the taxes for the second one. Because you are taking your trade here in this area. But every time we should not feel like we have to book the profit. We should have some guts to hold the trade. Once you take the trade, you have only two choices. One is wait until it is stopped out. Or wait until it reaches the target. You never know what is going to happen in the next minute or next hour or next day. If it is stopped out, happily accept the loss. Because your loss will be anyway within 2%, within 2% maximum accepted risk. So why should you worry? When you get a profit, you get good profit. Okay. So within 2 days, this trade is completed. This is the newly created 75-minute zone. And newly created 75-minute zone is having a 5 minutes horizon. That horizon really pushed. See, lesson 22 concept, how powerful it is. That's why you all should focus on that. It is a new concept I developed. It is not there in the market. After a big research, I developed the concept, introduced in lesson 22 itself. The moment we started the advanced strategies, first you learn HLQ zone, so the intraday related strategy, you learned HLQ zone strategy, lesson 21. Lesson 22, I explained this powerful concept. Many of our members who are doing these HLQ zone strategies, they got benefited with mixing lesson 22 with HLQ zone strategies. So many trades we got, successful trades. Now we are seeing, even today already we have seen a couple of examples. This is the second example, gave the trade, actual trade. Okay, how much profit it would have given you? Let us calculate rough calculations. Your entry is 677. Minus, what is the profit level? 645.10. See, the low of this candle is 645. 645 at 645.10 is our. So our trade would have been executed. We would have booked the profit. So 30.9 rupees you got the profit. Let us see how much profit you would have got in Tata Technologies. Tata Technologies on March futures expiry, 27th March futures. See, the margin is 83,000 only. And the net quantity is 700 into 700. You would have got 21,630 rupees profit with only 83,500. But what could be the approximate nearest value? This is at the time of closing today's market. But before that, okay, the price is also near to this only. Maybe few rupees extra, nothing more than that. Few rupees to the current price. Maybe I can say 83,600 rupees could be your margin cost. So this is your profit into 100 divided by 83,600. 25% ROI you would have gained, 25.87. That means 25.9% ROI you got. Close to 26%. Excellent, isn't it? Within 2 days. Within 2 days you would have got the profit. If you would have taken again another trade, still you might be holding your trade. And moreover, this zone is pierced. Stop buffer would have slightly saved your trade, your second trade, in case if you would have taken second trade. So, see, software suggested here. Because a new 75-minute zone is created, immediately we drawn and we planned our trade here. This is how you have to do. Why? Because the market is dynamic. New zones might be created. When new zones are created, the earlier trade, before taking a planning, the next opportunities, whatever you are getting, you have to utilize those opportunities. Suppose if this zone is further violated and moving up, this is still valid. Again you can plan. Until the daily zone is violated, any 75-minute supply zones, you can plan your bearish trade setup. The daily zone violates, then only trend will be changed to sideways. You may ask a question, suppose if a new daily zone is created, what I have to do? New daily supply zone. This will be invalid. And the new daily supply zone, new trade opportunities you get. Those new trade opportunities you can utilize. If any new trade opportunities, anyway our software will be listing that stock. And this stock will disappear from our list. New stock may come. If new stock is there, but if it is not having proper odd enhancer related parameters and all, probably our software will filter that particular stock. Suppose the zone is not having achievement, or the zone is not having proper RR, or the zone is leg out structure is not good, that is zone strength is not good. At the time RR values will, odd enhanced score values will be reduced, right? If odd enhanced score value for that particular newly created zone is less than 12, our software does not filter that stock. See, software is analyzing 230 stocks or 240 stocks, it is analyzing. After analyzing 200 stocks or 200 plus stocks, how many it is listed? Only 6 stocks it is listed. And out of these 6, MGL identified as the zone having highest probability to get success. That is what we have seen. We got success, MGL. The one we analyzed, the first one. Other than MGL, if you planned in BHEL, maybe this is the only one stock that is stopped out. Your trades would have been stopped out. Tata Steel, if you land our course properly, you would have identified a new 75-minute zone. You would have planned your trade here. You would have got a very good trade. And Concur, if you take a trade, still you will be holding the trade, Concur trade. And the last one is Ultratech. Ultratech is having a fine-tuned 5-minute zone, but prices did not reach. Is it having any daily zone created? Let us check. If a new daily supply zone is there, this is no more valid. So is there any daily zone created here? No. We have a drop. After that, this is a failed ERC. Some base candles here. As of now, as of today, what you are seeing on the chart, there is no daily supply zone. Suppose maybe Monday a big drop candle is created. Here you probably draw a zone. Or even you can consider this as a failed ERC. I don't think it is qualified as a failed ERC. So this is a base candle, this is a base candle, this is a base candle. All will be part. If a big drop candle is created, then this will be invalid. Suppose without a drop candle, prices reached on Monday or Tuesday in this zone, still it is valid for bearish trade setup. Maybe this zone will be successful or it will fail. They are all depending on the other factors. But as on today, excellent. And moreover, it is having a daily EMA confluence is also there. Sometimes what happens, prices reach here and sharply it will come down. That is what you have seen in Concur. Concur, you see, exactly from the EMA, it started moving down. That is the beauty of EMA when the zone is having a confluence. Especially your entry zone is having confluence. See, not only daily, your entry zone is also having confluence with EMA. Inside daily, you have 75-minute zone. And daily EMA confluence came up to 75-minute zone. This is your entry zone. That's why, see the order flow, how powerfully it pushed the prices down. Suppose if there is any further push, probably Monday or Tuesday it will reach. Or maybe in between some swings will be there. After 1 week or 10 days, it will reach the target. Anything will happen. We can't predict. So that means so far out of these 6, 1 is stopped out and 2 are successful trades and 1 you are in the trade, still in the trade. And Tata Steel, if you would have taken second trade, maybe second trade still you will be. Why second trade we take here? Maybe this is the lower time frame horizon. You may think it may give another trade opportunity. That way you might have taken. Still you are in the trade, but zone is pierced. So this is how you should analyze the stocks. Actual analysis. But why I am explaining this actual analysis after completion of these? Already we analyzed these zones. Because we identified these as a high probability trade setup supported stock. Which one? MGL. That is the first level of analysis. Second level of analysis, why I didn't do earlier? If I do second level of analysis, it is like I am giving you recommendations, which is not allowed. I can't give you the recommendations. I can only do post-market analysis, not a pre-market analysis. So that's why I stopped in the earlier video. I know the limits, my limits, where I have to stop there, I stopped. But you already learned where exactly you need to take your entry, how you should maintain your risk. Maximum cannot accept 2 beyond 2%. Everything you learn in our course. Without learning the course, directly you are getting into these lessons and listening. That is not a good choice. If anybody is without completing the course, you are listening these videos, that is not recommended. Learn the course, complete the course, be a good individual trader. Do your own analysis. Then your analysis will be perfect. Because when these supply demand zone concepts are working in a better way compared to other technical analysis concepts, obviously your analysis will give you good results. Whether I do the analysis or you do the analysis, almost we do the same because we learn the same concepts. Only difference is experience. Maybe my experience level, few decisions I may take based on my experience, few you may not be in a position to take. Except that only difference, rest everything is same. We are following the concepts. Even I am following the concepts. So that's why my suggestion to everyone, learn the course perfectly. Without completing the course, don't look into the NeoStock software reports. NeoStock software reports are useful for the members who completed the course. How our NeoStock software reports are helping to improve the efficiency of a trader. It is helping. Our software is not giving you any recommendations, right? Whatever the zones I am displaying, they are not the recommendations. Zones are not the recommendations. Because inside the zone, you have to fine tune and then you have to find the entry, you have to find your stop loss, you have to find your target. You are doing that. If I do that, then it is like I am giving you the recommendation. I am not doing that. Our software is not doing that. Our software is only helping you identifying the zone so that your efficiency will be improved. When your efficiency improves, what will happen? Your profit margins will improve. You take quick decisions. Rather than analyzing 200 stocks, see, you might have analyzed only these 6 stocks. By analyzing these 6 stocks, see how we identified the trades. The same way you also might have identified the trades. The same way you also might have planned your trades. And you would have got better profits. So that's why I understand NeoStock software only helps improving the efficiency of the trader because it is a software. It does the work very quickly. Manual way of identifying, it may take several months to identify these 4 stocks. By analyzing all the stocks, identifying these 6 bearish trade setup stocks, the minimum 1 month time you have to spend. By the time all the 6 zones will expire, right? Because everyday data is changing. When everyday data is changing, the market dynamics will change. So that's why every day maximum you can analyze a maximum 15 or 20 stocks. You can't analyze beyond that. But software is analyzing all the stocks in just 10 minutes. And after that, each time when you request the software, in just 1 second, it is giving you the results from the analysis it did. That's it. So this is about weekly income trade. With this, we have completed weekly income trade. So next week, we will look into monthly income trade related. After that, we will see Nifty, Bank Nifty, supply demand zone chain. After that, we will see how we can make use of price closed inside daily, weekly, monthly zones. How we can build our own strategies. Those things we will discuss. Okay. So let me take a break here and let's all meet again in our next video. Thank you.